Okay, I'm recording. Yeah. So the session is yours, Dr. Arjun.
Yeah, thank you, sir. Okay. Okay. Is my screen visible?
Yeah, very clear. Yeah. To me, it's very clear.
Yeah. Okay, sir. Okay. So good afternoon, everyone. So welcome you all for this IDP EDP talk series on product thinking and entrepreneurship for electrical and electronic engineers. Today is my fourth session. So today we are going to see about Startup 101. So everything you need to know to build your startup. So before going into the session, I'll just give a very brief background about myself so that people who are joining just today can know a little bit more about me. So myself, Dr. Arjun, I completed my master's in integrated circuit design from Technical University of Munich and then did a PhD in electrical engineering from Nanyang Technological University, Singapore, where my PhD was an industry sponsored PhD, which was sponsored by NXP Semiconductors. So during my master's and PhD, I was involved in designing various low power integrated circuits for biomedical implant applications and energy harvesting applications. And after my PhD, I got an opportunity to start up my own venture, which is Sepsitron. You can see the logo of my startup here. So I started up this company 3 years before in Singapore, and we were working on a rapid a medical device that can rapidly identify infectious diseases just before COVID hit this world. So I was the CTO of the company. So we were building this product, and then it took some time because of this COVID, all this pandemic-induced restrictions, lockdowns, and things like that. So right now I'm not continuing with my startup, but I'm like supporting it. My co-founder is still continuing it, but I'm just supporting it remotely as and when required. So right now I am working as a product manager at iCana, which is a subsidiary of Foxconn. So I think you all know about Foxconn, which is the one of the world's biggest contract electronics manufacturing company, which manufactures many consumer electronic devices like the Apple iPhones and things like that. So my company is part of Foxconn, and we design and develop radio frequency integrated circuits for wireless infrastructure, automotive applications, for 5G radio systems and things like that. So I'm currently working as a product manager and taking care of all the new product introduction and new product development of the company. So that is a very brief background about myself. So before we go into today's session, I just wanted to give a very short recap of what we have learned so far in my sessions. Like so this is my fourth session. So the past, like I had 3 sessions. So anyone who didn't attend any of my previous sessions, probably you can get the video recording of it and you could like watch it if you are interested in these topics. So my philosophy is to give you that big picture understanding of how to develop an electronic product, how to think about starting to commercialize it. So all my lecture series are kind of like structured in a way to give you that to make you develop that mindset of creating a new product, kind of like thinking to convert your IDP EDP project that you are doing into a real commercial venture or a startup idea. So the very first session I gave a very brief overview about electronics integrated circuits, and then the second session we saw about many different rapid prototyping techniques for building a minimum viable product. So whatever ideas you have, you just need to start prototyping it and testing it with real users who will give you some feedback. So we saw many different techniques to rapidly prototype your ideas, whether it is a software idea or whether it is a hardware idea. I gave a lot of different examples on this session. And then the last session, we saw about design thinking, basically to identify a good problem that is worthy of like building a business around. So before you start with anything, before you even start with a new product development, or before you start with developing whatever ideas you have, the very first thing that you need to do is design thinking, basically. Because the very first thing you need to do is identifying who your customers are, who your users are, and what sort of problems they are facing. And that problem should guide your solution or whatever ideas you are conceiving. So design thinking is basically used by all the big companies today. It is used by all the startups today. So it is a very important framework to know. And then we saw about lean startup method, basically to which will help you to systematically address all the uncertainties you will be having when you are building a startup venture. And then we saw about business model canvas, where I gave you like a lot of so basically the business model canvas itself is again a framework. So I gave you this framework which will help you to think about the many different phases, the many different aspects of business. So basically you can have an idea, you can have a product. So just if you take this mouse as an example, this mouse is a product. Basically it is an electronic product, but just developing this mouse alone will not help you to build a successful business. Of course this mouse can work well, you can come up with a very good technical specification, low power consumption, low area, like whatever all these technical specifications you can come up with, and you can build this mouse for very cheaply, but of course it will not help you to build a successful business. So that's where you need to understand this business model canvas. You need to start thinking about many different aspects of the business. So this is what we have seen in the past 3 sessions, but there is much more. So if you want to build a startup company, there is much more that you need to know. If you want to convert your IDP EDP project into a real startup venture, that there is much more you need to know, and that is why we are having this session today, basically to help you to understand many different terms and terminologies that are present in the startup world, help you to understand many different concepts of startup, entrepreneurship, and business. So the very first thing that you need to understand is, so whatever you are going to build, you need to understand whether there are people who are willing to buy it. So Logitech designs and develops this mouse because people like me, people like you buy it. If there is no one interested to buy this wireless mouse, the company is not going to get any profit. Back in the olden days, we all had this wired mouse, wired keyboards. Like wireless mouses and wireless keyboards were not available at that time, like probably like 10 years before. So but today you can see that like everything is like wireless, right? So you can see like there are like wireless earphones, wireless headphones, true wireless earbuds. Like, so basically I have this wired earphone. Then we have this wireless earphone, but still there is some wire dangling around. And then we have this true wireless earbuds that are like also called as earpods, that does not have any single wire dangling around. So these are different electronic products that are available in today's world. But why are they even available in today's world? Why were they not available before 10 years? Because there was no market back before 10 years. Probably the technology was also not so much developed before 10 years. So there are like many different things here. So market size is basically what is the revenue potential of whatever product or service you are building. So if you are building a wireless headphone, what is the revenue potential? If you are building a wireless mouse, wireless keyboard, what is the revenue opportunity? And this market size is basically divided into three different things. That is like the total available market, that is called as TAM, TAM, serviceable available market, which is called as SAM, SAM, or the target market, which is also called as serviceable obtainable market, or SOM. So TAM, SAM, SOM. If you go and see any market research report, so if you go and just type a market size of 5G, if you just go and type this in Google, you can find many different market reports. If you go and just type market size of electric vehicles, market size of consumer electronic devices, market size of mobile phones. So if you go and type this in Google, you can find many different market reports, and each market report would have done, so developing a market report takes a lot of time. So basically there are market research agencies who basically do lot of in-depth research, do lot of in-depth interviews to come up with this market research reports. So if you see these market research reports, you can find this TAM, SAM, all these numbers. So basically TAM means it is like the total market, the global market itself is called as the TAM. So globally, how many people will be interested to buy a wireless mouse? So if for example, if you are developing a wireless mouse, globally, how many people will be interested in developing a wireless mouse? That is what TAM is. But of course, as a company, you can't completely capture this global market, right? Because there are also a lot of competitors. You are not the only one who is developing this wireless mouse. There are many different companies who are developing this wireless mouse. So you can't really capture the entire global market. So you need to target, you need to like think about which are all the different regions you can target, and that is what serviceable available market. So let's say, for example, okay, you are in Malaysia, so probably you are just going to focus on the Southeast Asian market. So you are just going to focus on like Malaysia, Singapore, Indonesia, Thailand, Cambodia, Vietnam, all the Southeast Asian nations. So that is the serviceable available market. And then target market is the most accessible segment of this serviceable available market. So it is the nearest market to you. So if you are in Malaysia, yes, it is Malaysia. If you are in Singapore, yes, it is Singapore. If you are in India, it is India. So wherever you are, like wherever you want to just focus your all of your efforts on, that is called as the target market. So this global TAM will be always in billions, like because see, like the global population is like in billions, right? So if you just think that 50% of the people will have a laptop or a computer, so 50% of the global population will definitely get a wireless mouse. So that is how these market research agencies like come up with these numbers. Then how many people are getting computer products, accessories in Southeast Asia? That is the SAM. How many people are getting this computer accessories in Malaysia? That is the target market. So whenever you are building a startup, and especially it is very important if you want to raise investment from a venture capitalist. So if you want to build a startup, and if you have attended my previous session on business model canvas, you will clearly understand why today's session is very important. Because if you saw the business model canvas, there will be one segment called as cost structure revenue stream. So the cost that you incur in running your business basically depends on many different things, and it also depends on the markets you are targeting also. If you just say that I'm going to target the global market, and if you say that I'm just going to spend $1 billion in advertisement, then it means like no one will be investing in your company. Of course, like companies like Apple, bigger companies can do it, but as a startup company, you don't have that big potential to like really target the global market. So that is why like you need to start with a target market and then increase your revenue, increase your profits, and then slowly expand to other countries in the serviceable available market, and then slowly expand to the other global regions. So that is why if you go and speak with any venture capitalist, if you go and speak with any investor, they will ask you what is the market size of your product. And if you say them that your market size of the market size of your product is probably $500,000, then they will not invest in your company, because they need you to go for bigger markets. So you need to always target markets that are growing, markets that are bigger enough. So that is the key takeaway from this slide. So how do you come up with these numbers? Of course, you can just get a market research report, but then there are like two ways to come up with the market numbers, basically the TAM, SAM, and so on. So if you are just building something, if you are just building any product, if I'm just going to ask you what is the TAM, SAM, and so on, you need to know how to come up with these numbers, right? So that is why I'm explaining this. So there are like two different approaches you can use to come up with this market sizing. One is the top-down approach, and one is called as the bottom-up approach. So top-down approach is basically very simple. You just get a market research report and you just read the market research report and you find what is the total addressable market, what is the SAM, SOM, and all. So some of the market research companies are basically Forrester, Gartner, Statista, but of course there are like many different market research companies. If you just go on Google, you can find like plenty of different market research reports, but each of the company would have done the survey according to their own methods and methodologies. So you are not going to see a single number that is very uniform across all of these market research reports. So that is the pitfall of doing this top-down approach. You will basically, so Forrester will say that the market size of wireless mouse is $2 billion. Gartner will say that the market size of wireless mouse is like $3 billion. Statista may say that the market size is only $1 billion. So you are going to see many different numbers, but you just need to like use your intuition to really understand whether the numbers are making sense and whether the market is big enough or not. So that is how you do the top-down approach. So for example, for a simple example here is, so if you take sales customer relationship management software for gym operators in Singapore, basically how they come up with this market numbers are like, basically they'll just find out the total gym market in Singapore. So that is some number, and then how much money they are spending on information technology. So that is some number, and then how much money they are spending for software in that, and that will be some number. And in that portion, how much money is spent for customer relationship management based softwares. So leaving with like $126,000. So can anyone in the chat window just let me know whether this $126,000 is a good market for you to operate? Can anyone in the chat window can let me know? So if you are building a software for gym operators in Singapore or Malaysia, and if you find out that the market size of your target market is $126,000, will you start a company with this market size? Any guess? Any guess?
Yeah, I need. What are the potential of winning?
Any guess? So please don't feel shy if it is a wrong answer. It is not a problem. Let's just make this little bit interactive so that everyone can learn from it. Any guess? No one wants to guess, or can I just randomly call a name?
Yeah, please.
Okay, so Chong Shin Lin, are you there? Chong Shin Lin. Okay, Fadila, are you there? So who is there? Can anyone like just raise your hands in the chat? Okay, so I think a professor is there. So other than that, like any students? Students who is there? Any guess? No one wants to even answer.
Yeah, Mr. Bravin, what is the answer? XD. What is
No,
Bravin?
sir, I have no idea what to say. But I'm here lah.
So if you are the investor, you want to invest money in this market or not? The question is, you want to put your money in? Do you?
I because I don't understand itself. So
Oh, okay.
No.
Okay. So maybe, yeah, then maybe I will just explain it again. So, okay, so let's simply take you are building a wireless mouse. So that is your product. Like you are building this wireless mouse and you are going to sell this. And the market you are going to sell this has a potential of $100,000. So let's say each mouse is like $1. So the maximum that you can sell in Singapore is 100,000 units. So that is what market size means. So like if the price of this mouse is $1, if the market size is like $100,000, the maximum number of units you can sell this for 1 year is 100,000. And of course, you are not alone. You are still competing with many different companies also. So will an investor invest in this market? Now, the maximum potential that you are going to get, like if you outcompete every competitor in this in Singapore, you can maximum earn $100,000 per year.
But will I be able to sell 100,000 units within 1 year?
Yeah, so that is one another constraint, right? So that is one constraint. Then there is going to be a lot of competitors also. So that is another constraint.
And then
so
maybe they'll sell it more cheaper. Then maybe another unit they sell for 80 cents or something. I don't know. So there's a lot of things to see before you.
Yes. So but okay. So whatever you sell, like the maximum revenue you can get is like only $100,000. Okay, will an investor invest in this company?
Most likely, yes.
Okay. Okay. So most likely the investor will not invest in this company because the every venture capitalist will look for revenues in the numbers of like $1 million. So if your company is not able to really target a market that is big enough, no investor will invest in your company. If you just say them that the market size of the market that I'm targeting is only $100,000, then the investor will know that like whatever you do, the maximum revenue you are going to get is only $100,000. You can't get anything more than that, right? So then there is no potential to invest in your company.
But if you're a new startup company, how are you gonna?
So even if you are a new startup company, it is the investor will definitely for 100% like he will not invest, because he will know that like you are now going to compete with many different competitors, and this 100,000 itself is not guaranteed for you, right? So probably you are going to earn only like $10,000, like 10% of this. So if you just capture 10% of this market, you can earn like $10,000. So for $10,000, like why the investor should invest in your company? He can just put his money in a bank account and you can get like 4% interest rate, right? Yeah. So this is just like a very brief understanding of how to like calculate the market size and the potential of it. So the next way to also calculate market size is like doing bottom-up approach. So doing bottom-up approach is like you doing your own research basically. So you doing your own research, which means basically you will find out how much money every consumer will pay for the product that you are building, and how many consumers are willing to pay, and then you will multiply it. So that is the very simple. So if you find out that in Johor, so let's say like let's not even speak about Johor. So let's just speak about UTHM college university campus. So if you know that inside UTHM university campus there are like, let's say there are like 200 professors, 1,000 students, something like that. So let's say 1,000 students will definitely have each one of the student will have a laptop. So you can sell 1,000 wireless mouses to UTHM students. So that is how you will calculate the market size of UTHM alone. So if again like one mouse is like $1, that is what a student can afford to buy this mouse, then your market size inside UTHM is $1,000. That's it. So that is your target market. So if it costs you 50 cents to make this mouse, you can get $500 profit. But if it costs you $2 to make this mouse, and if you just sell it at $1, then basically you are going to lose $100 of money. So this is how you think about how to target markets that are big enough. So the next important thing is go-to-market strategy, which is also called as how you can start to sell your product. So how you can sell your product in the market, how to reach, how to penetrate the market, how to start getting revenue. So again, coming back to the UTHM. So if you just choose, okay, whatever product I'm going to build, I'm going to just sell it to the UTHM students. You need to first of all understand why you are choosing this market. Basically, any company wants to choose a market that is big enough, but I'm just constraining it to UTHM so that like it will be easier for everyone to understand. But so if you choose UTHM college management, sorry, not college management, if you just choose UTHM university, then why are you choosing this market? So probably you will have some reasons, right? So probably you are working in UTHM, so it is very easy for you to like sell this to the students and the professors. So probably you need some reasoning, and then how will you get these people as customers basically? So can you do some marketing? Can you just put some notice boards where you can like say about your product, or can you set up some stall at different points of the university so that people can like use this mouse and like understand how good it is and things like that. So So when you think about all of these things, you will understand that you are going to spend some money, right? So if you just, okay, imagine like you are printing out 100 pamphlets and you just distribute 100 pamphlets. So what is the cost of this 100 pamphlets? So if it is costing you $100, and if you are able to get 100 customers by just giving this 100 pamphlets, then it means the cost of acquiring one customer is $1. Basically, because like 100 divided by 100, right? At the same time, if you give 100 pamphlets and you are able to acquire like 200 customers, then the cost of acquiring a single customer is only $0.5. If you see this in if you do a video advertisement, if you just publish your advertisement in a local channel or a radio channel or in YouTube, and you spend $100 and you get like 100 customers, then it means again your cost of acquiring one customer is $1. So that is what go-to-market strategy is. Whenever you are thinking about starting to sell your product, you need to understand which market you are going to target, why are you targeting this market, how will you acquire customers in this market, and what is the customer acquisition cost. So without thinking any of these things, then you will not clearly understand how to do business. So customer acquisition cost is just one metric, but there are also like many different metrics. I'm not going to like go into much details of all of these metrics, but I'm just showing you these metrics because this is how every company will track their profits and revenue. So how many people here know that recently Facebook, recently Twitter, like many other companies laid off many different lot of employees? So how many people even know that information? How many people recently saw news that Facebook like laid off, I think around 11,000 employees, Twitter laid off like 50% of their complete workforce? How many people saw that, saw those news? Yeah. Any students? Any students saw those news? Again, so whatever I'm speaking, it is not only relevant for a startup. It is all going to be applicable for you even when you go and work in a bigger company. So this is how every bigger company will track their metrics, and of course, like you are all part of like their metrics basically. So anyone saw those news? So who all want to go for a job after completing your graduation? Who all want to go for a job after completing your studies? Okay. Anyone else? Why is the so silent today? No one is answering. I think everyone is in the holiday mood already. So who all wants to go for a job? Okay. Okay, so of course, yeah. Okay, so I'm not going to ask any more questions hereafter. So okay, so customer acquisition metrics basically it means like if you work in a bigger company, like this is how every company will track their performance, and all of their employees basically will be coming under this system where they track each and everyone's performance. So basically Twitter, which was recently acquired by Elon Musk, like laid off 50% of the workforce because Twitter was making around $40 billion loss per year. So it was like a loss-making company. Facebook was still doing good. It was still profitable, but they recently laid off around 11,000 people because their revenue started to go down, and all of this is because, so next year we are all going into like recession. Like 80% of the people in the industry predict that next year there will be a recession, because you all know that like the cost of all the living cost is rising, inflation is rising, so all the companies are trying to cut their workforce. So basically this is how they will track basically all these metrics. They will have every company will have all of these metrics, like monthly recurring revenue, annual recurring revenue, month-on-month growth, year-on-year growth. So they will start to track all of these things. So if based on their tracking, if they find that like if their revenue is falling, if the profits are falling, then this is when the company starts to take some action, and they will start to like see where they can like reduce the cost, where they can like increase their revenue. So if you start up your own company, if you or if you even work in a bigger company, you need to understand how to track the growth of the company you are working on. So that will help you to like understand whether the company you are working is doing good, or like whether it is bad. And if it is bad, it means that you need to also start looking for other job opportunities, so that you will be safe even if there is a layoff going to happen. Okay, so we saw 4 different things that kinds of like four important terms and terminologies of the business world, of the startup world. The fifth most important terminology is traction. So traction is nothing but like the progress of your startup. So if you are building a company, what is the progress your company is making? What is the momentum your company is gaining? So I just want to like also like say you this, because like whatever information I'm sharing here, it is not going to be only applicable if you are going to build a startup. So it is all applicable even if you go for a job in a bigger company. So people who want to like, people either want to start up their own company, or people who want to like, everyone wants to go for a job, right? That is why we study, right? Like no one, like either we want to go for a good job, or we go and start up our own company. Basically I have done both. Like I started up my company, and now I am working in a bigger company also, so I have done both. So all the concepts that I'm sharing you here is like applicable for both of these worlds. Like either if you go into the corporate world and start working as an employee, or if you start up your own company and become an entrepreneur. So whatever I'm speaking, so you can like kind of like fit it into your own framework and ideology. So if you want to just work for a company, then whatever I'm saying will still be applicable for you. So when if you take any company, it needs to have some good traction. Without any traction, without any progress, without any momentum, the companies will start to lose a lot of money, and they will start to eventually like fail. So that is what is happening in many of the companies right now. So example, Twitter, if you take Twitter, like $40 billion loss every year means like they were having a weaker traction. So weaker traction means like probably they don't have like much profits, they don't have much customers, their costs are very big, so they are not able to cover up their cost. Their revenue is very small. So this is what traction is all about, and you can like split this into many different aspects. So basically, if you just take any customers, basically if you have paying customers, then it means you have good traction. If you don't have any paying customers, then it means your traction is weak. Then if you just take any product that you're building, so of course, coming back to the wireless mouse, if you have a fully functional product that you can start to commercialize and that you can start to sell, then it means your traction is good. But if you just have some idea, or if you just have some like random prototype which is still not ready, then your traction is weak. Then market. So coming back to the market. So as I said before, if you have a very big market, then it means you have a good traction. If your market size is very small, then your traction is very weak. So what is the market size of Facebook, Twitter? So the market size of Facebook, Twitter is huge, right? Billions of dollars, because globally everyone uses Facebook, Twitter. So if you just omit China alone, because like China has their own firewalls, where like in China, like you can't really use Google, Facebook, these kind of platforms. So if you come to India, you can't use TikTok. So because all of like globally, like based on the geopolitical tensions, like some countries will restrict the product of some other countries. If you see US and China, they are now restricting lot. US is now restricting lot of semiconductor based knowledge to China. So they want to like basically they don't want to like sell anything to China. So your market needs to be big, but China is also like sustaining, because the market of China itself is like very big. So whatever they are going to build, they can still be profitable, even if they are not able to sell it to other parts of the world. So that is why your market needs to be big. If your market is very small, then if there is some issue, then your company will immediately be getting into losses. So then competitors. So competitors, basically how many competitors are there? What are their advantages? What are their weakness? If there are like lot of competitors who are like very strong, then basically your traction is very weak, because you need to now compete with all of these competitors. But if the competitors are not very strong, then you have some good potential to commercialize your ideas. Then team. So team is very important. Who are all your team members? So what are all their skill sets? So whether you have any advisors in your team who are like who have like lot of experience and who are willing to share their knowledge. Sometimes probably they will even invest. Advisors will even invest some money into your product. So if you have all of these things, then your traction is good enough. So then the sixth most important thing that you need to understand is financial modeling. So financial modeling is nothing but thinking about the financials of your company or your product. So basically, if you are designing if you are just doing any project, like you are going to get some materials, right? So probably if you are doing an electronic project, if you are building some water monitoring sensor, then you are going to get some Arduino board, you are going to get some sensor, you are going to get a Raspberry Pi board, you are going to get some breadboard, you are going to get a multimeter. So these are all kind of like the bill of materials that you are going to spend, right? So and once you spend this, and once you build your project, if someone is interested to buy your product, then basically you can start to make money with your project. So you spend like $100 to make this, and if someone is willing to give you $200 to buy this, then basically you are making $100 profit. So this is what cash in and cash out of the company or of the project. So basically how much money is going out of your own pockets, how much money is coming into your own pockets. If you just visualize this for the next 12 months or for the next 48 months, like 12 months or like 24 months or like, so 2 year, 3 year, 4 year, 5 years. If you are able to visualize this, then that is called as financial modeling. Why is this important? Because every company will do this exercise because they want to understand how much money they can make after 1 year or 2 year, or whether there's going to be some problems in making money. So for example, US recently imposed a lot of sanctions on China. So many companies are not able to sell their products to Chinese companies. So what is the impact of this? So if they just visualize this and if they build their financial model, they will understand how much money they are going to lose now. So right now at this point before the sanction, if they are able to make $1 billion every year from the China market alone, from the next year they will not be able to make it. So it means in their bank account there is going to be a deficit of $1 billion now. So if there is a deficit of this $1 billion, will the company still be profitable? So that is what they will try to understand by doing this financial modeling. And of course, as a student, as a future employee of any other company, I strongly encourage you to go and look into the financial reports of the companies you are interested in. This will help you to really understand if the company is doing good or bad. So of course, like everyone is interested in getting a job in Facebook, Google, but these are the people who first got affected by the layoffs. So like people always had the mindset that if you go on, if you get a job in Google, all the bigger companies, then your life is like kind of safe and settled. That is always the mindset of everyone. But again, if you see the recent happenings that are currently going on, those are the people who are the first to be out of the company, because like these bigger companies are the companies who will immediately start to like, because they will track they have like a big team to like track all these metrics. So wherever they go bad, they will immediately like start to like lay off. So as a future potential employee, I would recommend you to like go and look into the financial reports. All these financial reports are publicly available. Unless it is a startup company. So all the bigger companies are public, all the public companies, all the companies that you can see in the national stock market or the US stock market, all these are called as public companies. So all these public companies will publicly disclose all their financial reports. So where you can go and see how much money they are making every year, how much money they are losing every year, and things like that, which will help you to understand whether the company is doing good or not doing good. So how to like, you can ask me, okay, like what to do with this information. So imagine like you got 2 interview opportunities, you got 2 offers basically. So you got an offer from Facebook, you got an offer from some other company. You go and like see both of the financial reports, and you will understand, okay, this company, some other company is doing better than Facebook. Then even though Facebook is a well-known name, you should not go to Facebook. You should not select Facebook as your employment contract, because if you see this statement, you will understand which company is doing good, better financially, which company is not better financially. Okay, so yeah, as I told you before, like financial modeling will help you to really understand how much money your company is making, how much money your company is losing every month, what is the money your company needs to achieve all of the milestones or targets, how much profit your company is making. So you can do this for your own company, or you can just go and like see the reports of existing companies, so to help you understand what is financial modeling. Okay, so coming almost closer to the end, I want to also give you a little bit information about incubators and accelerators. So this is primarily for people who are interested to start up their own venture. So students who, if any of the students want to become an entrepreneur, start up your own venture, then you need to also start looking about incubators and accelerators. So incubators are basically, I hope like maybe UTHM itself will have some incubation space for students to develop their ideas, and sometimes can also like connect you with some potential investors and things like that. So incubators are places where you kind of like prototype your idea, you develop your idea. They basically also like offer you some advice on how to like how to market your products, how to sell your products, how to develop your products, how to do advertisements, how to brand your company and things like that. So there are like many different incubators. Probably if you just type startup incubator in Malaysia, something like that in Google, you can find many different startup incubators, and each of this incubator will have their own ideologies. Some incubators will focus only on hardware relevant ideas. Some incubators may focus on like software relevant ideas. So whatever projects you are doing, like just like see where it fits in, and then you can see more about those incubators in their website, and also see if they are offering any programs where you can like go and join and further develop your idea into a startup venture. And once you have completed this incubation, then there is a separate thing called as accelerator, which will help you to like further scale up your company basically. So once you have completed your prototype, then these accelerators will help you to like further expand your business, further expand your investment into the company and things like that. So when I started up my own company, I joined a startup accelerator program. So by the program was running for 3 months, and then by the end of the 3 months, I got selected. My company got selected for a seed investment. We received around $250,000 US, and then we used that money to like hire more team members, and then like start doing all the product development and things like that. So probably if anyone is interested, you can also type you just go into Google and you can search like startup accelerators in Malaysia or startup accelerators in like Singapore, and then you can find like many different accelerator programs. So you can see if you are like eligible for because like each program will have their own eligibility criteria. So you can see whether your ideas are kind of like eligible for applying to these programs. And if you feel that if some of these programs are good, then you can also like apply to them. And if you get selected, then it will basically like help you to speed up everything in your entrepreneurship journey. So things that will take you like 1 year to do it on your own will just take like 10 days or 15 days if you just go into these incubators or like accelerator programs. So that is why basically they call themselves as accelerators. Okay, so that's all for my session today. So any questions? I think there are like few questions in the chat. If China can self-sustain, why does this semiconductor shortage still occur? So basically, so semiconductor shortage is not because of the US sanctions on China. Basically, US sanctions on China are because US does not want China to develop in this semiconductor field. So the semiconductor shortage is because, okay, right now there is no, like the semiconductor shortage is eased up, because now basically it is like opposite. Basically semiconductor companies have a lot of inventory which they are not able to sell. Like back before, like 7-8 months before, just after the COVID pandemic restrictions got lifted, there was like this semiconductor shortage because of all the lockdowns and things like that. But now, like there is not shortage in many of the fields. Probably some shortage in the automotive industry and some industries like it, but mostly like the semiconductor shortage is not still anymore. But semiconductor companies are like bracing up for a bad winter, basically, like because every industry is predicting that next year there will be some sort of a recession. So people are like not spending enough money to buy anything because the cost of living has increased, inflation has increased. So people are not spending any money to buy anything. So if people are not spending any money to buy anything, then basically it means all the companies cannot sell anything. If all the companies cannot sell anything, they can't like get new orders. So if people don't get new orders, semiconductor companies will have a lot big inventory that cannot be sold off. So that is what is currently happening now. So do you recommend fresh graduate to start their first job at new company that just established, or go work with a well company? Probably my advice will be to go and work in a new company, basically, than working in an established company. Because if you go and work in a new company, the number of people working there will be very less, basically. So if you go and work in a bigger company, you are going to just do a very small portion of the bigger product. But if you go and work in a smaller company, you are going to do a much larger portion of the product, so which will help you to learn a lot of things. So see, like I started up my company and I learned a lot of things. I was in charge of doing many different things, and that is how I learned many different things. If I just went into a bigger company, I will just do some small portion. That's it. So if you go for a software company, if you go and work in a software company, if you go and work in Google, basically you will just do some small portion of the big product that Google is building. But at the same time, if you go and work in a smaller company, you will do like 50% or 60% of the complete product, which will help you to really understand the complete product development process. And that is how you become a product manager later in your future career. So currently I'm working as a product manager because I understand how to develop a product right from the beginning all the way to marketing it, all the way to selling it to the customer, because of my startup experience, because of my entrepreneurship experience. If I didn't started up a company, I would have definitely not had this knowledge. So if you just ask me like what will you do, what you will be doing now if you didn't start up a company, I can say that I will just do some design work. Basically, that's what I can do if I didn't had this knowledge. But since I started up my own company, I and also like developed the product myself, commercialized the product myself, sold this product myself, I'm able to understand a lot of many different things in the business aspects also. So that is how like it will like further speed up your career progress. So what if the new company lack of fund to pay their worker? Because it is one of the main issue for fresh grads to go to new company and not pay well. So yeah, sometimes it can happen. Newer companies, sometimes they will not have money to like pay. So that's why like you need to also like do some background study about the companies. Of course, like startup companies will not have publicly disclosed financial reports, but you can see whether they have raised any investment. You can during the interview you can directly ask how much revenue the company is making, what is the profitability of the company. So you can ask these questions when you are having the interview. So interview is not only for the company to ask questions to you. It is also an opportunity for you to also ask questions to the company. So you can ask questions to know more about the financial position of the startup company. You can read if there are any recent investments that are coming into the company, what is the quantum of the investment, then you can know whether the company is good enough or not. If you feel that then the company is good, then of course you can go and like work there. But but after working, if you find that the company is not able to like pay your salaries, then of course like with this experience you can easily jump to a bigger company also. Okay, any other questions? Any other questions?
Oh yeah, I have one question for you, Dr. Arjun.
Yeah, sir.
I just something come into my mind, right, about this entrepreneurship, right? Yeah, talk about this seeding and what they call seeding grant, right, in university, something like for the undergraduate or maybe postgraduate to look for funding in university and some opportunity, and then they have this incubator and then this accelerator program, mostly for students, right?
Yes, sir.
What about for those for students who already step into the in the community and grown up to be independent and look for opportunity? So what are the chances of getting to investments? What are the channel to look for investments and look for collaboration and to spin off? I mean
Yes,
in
sir.
university life and in the real life, right? Is there any others advices from you?
Yes, sir. So yeah, there are like two different business models here. So if you just think about in the university level, probably the way to spin off is like converting this project as an intellectual property, basically like patent it or like copywriting it, and then we can license this patent to a bigger company who is interested in this work, and they will be giving the university some sort of royalties. So I think this is what is happening in many of the UK universities. I think also in MIT, so such like Stanford, such bigger US universities, even in Singapore also, like from the university that I came, Nanyang Technological University. So basically they have a technology commercialization office, which is called as NTUTU. Basically they kind of like encourage all the PhD researchers, all the students to commercialize. So basically they convert their ideas into some sort of patents and things like that. So once the patent is granted, then the university will kind of like try to license this patent to bigger companies who are interested in this technology. So this is one way. Another way is the students directly approaching their investors. But for that, like basically they need to have some good traction. So they need to have some good progress. At least they should kind of like have something like working, and also identify some market, identify some potential, identify problems, and they need to like kind of like prove this to the investor that whatever they are doing is meaningful, whatever they are doing can provide some good return on investment for the investor.
Yeah. Thank you very much.
Yeah.
Thank you very much. Yes. Any more questions from the students? I think the students are interested more on the job experience, right?
Yeah. So I think there's one more question. So which one you will choose, experience or salary? Of course, experience during the early stages of your career, salary during the later stages of your career. So so once you graduate, go for experience. If you don't get enough experience, then you can't really demand a better salary in the later years of your life.
Yeah.
Yeah.
I agree. I agree.
Yeah.
It's good to be hard and
yeah.
push
because
during
like
young.
That's why you also need to like take some risk as a youngster. Like you have this you have this capability to take risk, and so you need to try many different things. So I started up a company very lately, actually. Like once I got married, like it was a like kind of a huge risk, but I just took that risk because I got an investment. If I didn't get an investment, I would have not taken that risk. But for you, like, you are still very early, right? Like you are still in the age of like 20, 21. So you can, like, you still have like more risk taking appetite than me. So you need to like try many different things. You just go and like try to start up a company when you are in the university itself. There are like many students who are like starting companies when they are just doing their studies itself. Even if it fails, good, no problem. Don't think that like if you fail, like people will laugh at you, people will like mock at you. So those are like olden days. Like when I was a student, I was doing undergrad. Yeah, people were mocking. Like if someone fails in the exam, yeah, people will laugh. If someone fails in life, yes, people will laugh. But today it is completely different. Companies are looking for experiences. Companies are asking you, have you even failed somewhere in your life? Because they want to understand what sort of like resilience you showed when you failed in your life. What sort of like diverse experience you bring to the company. So always like go for like experience. If you get the same pay in two different companies, but in one company they are making you the in charge of developing the complete product. In another company, you are going to just do a small thing. Just take this job where you are going to do the complete product for the same salary. Even if the salary is less during the early stages, it will help you to like get a very good understanding of the complete product development process.
Yeah, totally agreed, right? Totally agreed. The experience, even a failed experience, right? It's a good experience, right? Even a failed research is a good research anyway.
Yes.
Right? You could prove it's failed, right? You prove it failed and you experience it failed, and that's the lesson, right? So we look forward as long we can still survive and look forward. Thank you for the advice. Any more questions from the student, or else we will probably stop earlier. Any more? 1, 2, nothing, right? Okay, thank you very much. Thank you very much for Dr. Arjun for sharing.
Thank you, sir.
That is very good advice. Although I think a lot of students are having this holiday mood.
Yeah.
Are likely to respond very instantly. But hopefully next week, in the final week, so that we have the lecture series, we could have a better what they call interactive section, right? Thank you very much. Okay, see you. Bye everybody.
Thank you, sir.
Have a nice holiday and nice holiday to you, Dr. Arjun.
Yeah. Thank you, sir. Bye.